has started. Okay, so right, my name is Ronald Kashweka, and you've probably seen some of my videos from YouTube where I do some tutorials. Sometimes I'm solving a Zika past paper question. Sometimes I'm doing Excel. Sometimes I'm teaching people how to run management accounts. So here is the actual thing that I do. So I'm actually part of RK Solutions. What we do is we do online lessons for subjects like business economics, management accounting, financial reporting, financial accounting, and taxation. And we've been doing it for a few years now, the online sessions. Okay. So we do them the same exact way you're seeing the session right now. Okay. The sessions are practical. Most of the time, we have a session in the evening, a learning session, and then we'll have another session at night, which is an active session, which is a practical session, or the way I love to call them, a revision session, where we actually get to learn, practice, and then solve actual Zika past paper questions. So our lessons come in packages. We have it's a single package, live sessions, more like these sessions. You join and then you are learning. Recordings, you watch the recordings, previous recordings and current recordings, and then the materials. You get a book and papers. So it's an entire package. Okay. All right. So this is business economics, and we are going to understand what business economics is. I bet maybe some of you have been wondering, like, okay, maybe you just heard economics, business, but what is it? Okay, I'm sure some of you are practically running businesses. Okay, you're practically running businesses, and in your business, you make decisions. Okay, in your business, you make decisions. Sometimes you might make a decision. Let's say, for instance, you're producing two products. Okay, you have product A and you have product B, but you're using the same material. But because you don't have enough of that material, you choose, you are like you are stuck in between. You're like you need to make a decision now, either to produce product A or product B, and then you're like, okay, let me just choose product B. And some of the reasons why you produce product B are because maybe product B will give you more profit, right, Mr. Chanda? Or if it doesn't give you more profit, or it has got more demand, so you have more sales. Am I correct, Mr. Chanda? You tend to make such decisions in your business. Okay, all right, so let's get to link that knowledge to business economics. Okay, let's get to understand what business economics is. I've opened the paper, but we'll definitely cruise through the paper as soon as we are done with understanding the theory pertaining to business economics. So business economics is practically the study of how businesses make decisions using principles of economics. So this will take you to another part of economics. Okay. So basically, for us to understand business economics, we need to understand two things. I'm going to separate them. That's what a business is. Okay. And economics. Okay. When we talk about businesses, what do we mean? And when we talk about economics, what do we mean? Okay. So let's break down this term to make it simpler to understand. Okay. Let's break it down. So I'll start with economics. So when we talk about economics, we are basically looking at the theory of how resources are produced, distributed, or consumed. Okay, how certain particular resources, maybe our raw materials, are produced, distributed, or consumed. And when we talk about businesses, we are looking at the functional business, the actual business. In this case, when you talk about businesses, we are looking at practical decisions managers make daily. Okay, in terms of economics, when we talk about a business, we are looking at practical decisions managers make daily. So let's combine these two, economics and business. So business economics is the study of how businesses make decisions using the principles of economics. By the principles of economics, I'm talking about the theory on how resources are produced, on how resources are distributed, and practically how resources are consumed. So let's say we put it in simple terms. We get to understand business economics in simple terms. Okay, we can say business economics is practically applying economics to solve business problems. Okay, applying economics to solve business problems. I'm going to ask you one question. What do you think economics is? I know I've explained this, but I just want to make sure we're on the same page. Anybody, what do you think economics is from my explanation? Okay, so every single time you see the word economics, think about these three things: how resources are produced, distributed, and consumed. How resources are produced, distributed, and consumed. And then businesses, we know that an actual business, okay, a place of work. And then when we talk about business economics, we are mainly focusing on practical decision making. Okay, so the art of applying economics to solve business problems is what we call business economics. Let me give you a number of examples that might be of help. Okay, let me give you a number of examples that might be of help. For instance, we use business economics to decide if should a company increase the production. Okay, should a company increase production? Should a company increase production? Let me ask you this because I want to make sure that we understand. So firstly, this is my first example: should a company increase production? Let me ask you this question: if a company were to increase production, what do you think would be affected? If a company were to increase production, what do you think would be affected? Mr. Oscar, if a company were to increase production, what do you think would be affected?
Yes, sir. Sorry.
Yes, if a company were to increase
Hello.
production, yes, yes, sir. If a company were to increase production, what do you think would be affected?
If the company increases production, then automatically you can also increase.
Okay. Madam Hope, would you like to give it a try? Think of it like this. You're running a business, you own a business, and then you're producing at a certain limit. If you were to produce more products, what do you think would be affected? How can your business be affected? Just think about it. Imagine you own a business and you're running it. Okay, so let me just explain a few things that might be affected. Number one, you get to spend more on materials for your product. Number two, there's a high chance that if you produce a lot of goods, maybe some of them won't be bought. And if some of them are not bought, it means you still have them and they might go bad, which is not good for your business. Okay. So you have to look at the demand and then you also look at the costs. And then also, business economics helps us in making decisions on things like how should goods be sold for, like for instance, the price, how much should our products be sold at. Okay, and then also, should the business borrow money to expand, or shouldn't it borrow money to expand? Okay, so all these are practically, economic questions that we apply in various businesses. Okay, so in terms of business economics, we are looking at two main sides. Okay, in terms of business economics, we are looking at two main sides. There's what we call macroeconomics, and there's what we call microeconomics. Let me do this. I'm going to stop sharing because I want to share my entire screen. Just give me a second. I want to share my entire screen. I want to type something via Excel. Right now, I'm sharing just the question. So I want to type something via Excel. Just give me a second. I want to share my entire screen. I type something via Excel, and then I explain to you macroeconomics and microeconomics. So let me just share my entire screen. Just give me a second. Madam Hope, are you still here? Mr. Oscar, you can see my screen?
Yes, sir. Yes.
Okay. I was doing financial accounting. Just a second. Okay, I've opened Excel. So the reason why I've opened Excel is because I want to, since we understand what business economics is, I want to make sure now we get to understand what these two are, the macroeconomics and microeconomics as well. Okay, so let me just type them here. Okay, so I'm going to say microeconomics. Okay, I'm going to put microeconomics. Okay, and then afterwards on the other side I'm going to put macroeconomics, so I'll get to understand the two, and then afterwards we'll look at the details pertaining to these two. So I'll put macroeconomics here. Okay, so we have microeconomics and then we have macroeconomics here. Okay, so when we talk about these two, okay, when we talk about these two, micro, we know that we are looking at small scale decisions. Mainly business economics about decision making, okay? So when you talk about microeconomics, we are looking at small scale decisions, okay? We are looking at small scale decisions. And then when we talk about macroeconomics, we are looking at big scale, the massive scales, okay? So big scale decisions, or the entire economy. Okay, so when you talk about macroeconomics, you're looking at big scale decisions or the entire economy, okay? Just a second. All right. So let's start with macro. Okay, let's start with microeconomics, the small scale decisions. Okay, so this particular one actually focuses on individuals. It focuses on individuals. Okay, let me put it like this. It focuses on individual businesses rather. Okay, by individual businesses, we are talking about maybe sole traders. It focuses on individual businesses, industries, and consumers. Okay, when you talk about consumers, we are looking at your customers, the people who actually buy your goods. Okay, an example we can talk about, things like price of bread, the cost of producing shoes, or the wages in one company. We are looking at individual businesses, okay, industries, or the consumers. Individual businesses, industries, or the consumers. So this one is small scale, okay? But the big scale one actually looks at the national or global economy, okay? So macroeconomics is the big scale decisions, or an entire economics, okay? So on this one, we are looking at the entire nation or the global economy. An example can be, for instance, if you are learning the inflation in Zambia, or the unemployment rate, or the exchange rate of kwacha to dollar, all that is under macroeconomics. Okay, examples in microeconomics, we can talk about wages of employees in a company, okay, the price of bread, the cost of producing a particular item, or salaries or anything. But when we talk about macro, we are talking about things like inflation, unemployment rate, the exchange rate, such things. Okay, so macroeconomics is for the big guys, the entire country, whilst microeconomic is for individual businesses, industries, and also um, uh, consumers. But there's business economics actually marries the two. Okay, business economics combines the two. Under business economics, you'll find both microeconomics and macroeconomics. So economics connects both, so businesses can make decisions whilst considering the wider economy. Are you getting my point, Mr. Oscar? Business economics combines both so that businesses can make decisions while considering the wider economy, like the entire economy in general. It looks at both microeconomics and then also looks at macroeconomics. Okay, but certain people might have a question, like your question might be, is business economics really important? Is it really necessary for us to learn business economics? And why should I learn business economics? Someone might have a question. Okay, so there's one particular thing that I've been mentioning over and over again. How does business economics help businesses? I said it's for decision making. Madam Hope, did you hear me when I said decision making? Hello, Madam Hope.
Like I'm able to get you, but it's breaking. But at least I can able to get something.
Oh, it's
You said
breaking.
you're recording this.
Yes, yes, yes.
Yeah, I think I'll catch up in the record, but it's fine. I'm following.
Okay. Just I wasn't expecting it to break. I think the Wi-Fi looks as though it's smooth.
Or maybe
Uh,
it's here.
maybe because Mr. Oscar. Am I also breaking on your side?
It's breaking, yes, it's breaking.
It's breaking. Anyways, okay. All right. Let me just finish this up. Okay. All right, so let's talk about the importance of business economics. Okay, so why is the subject or why is the lesson important? Okay, why is it important for practically students and also accountants or anybody in finance to actually get to learn business economics? Number one, I'm talking about the importance now. Number one, let me just type the word importance. Okay, and yeah, a question like this might come. Number one, it's decision making. Okay, number one, it's decision making. So business economics helps managers to choose between alternatives. It gives businesses alternatives and then gives managers information to use in order for them to choose the best alternative amongst the two. Okay, for instance, they might decide either to hire more staff or to buy a machine. Which one is cost effective, which one is cheaper, and which one will actually produce more. Okay, it also helps in terms of planning. Okay, it also helps in terms of planning. So businesses forecast future sales, the costs and also the profit. They plan. Okay, they plan for their future. They make a forecast, which is a plan for the future sales, the future costs, which will actually enable us to reach at a figure which will represent our future profit. Okay, and then also it helps us in terms of policy making. Okay, it helps us in terms of policy making. So governments actually use it to create tax, trade and also monetary policies. Practically the government is using business economics. They look at the entire macro and microeconomy, and then they'll decide the tax rate, the trade information, and monetary policies. Okay, the other thing is it also helps us in terms of profit maximization. Okay, it also helps us in terms of profit maximization. It ensures businesses survive and grow. It helps us make profit. When we look at both the macroeconomy, we should talk about the big economy, the nation's economy, like for instance inflation and unemployment rates, and then we look at the salaries and everything. We compare everything. We can make proper decisions, reduce our costs, cost reduction, cost control that will assist us to ensure we actually maximize our profit. And then lastly, business economic helps us in terms of risk analysis. Okay, business economics helps us in terms of risk analysis. It helps us to understand uncertainty in markets. Okay, if you're unsure about something, business economics is actually going to tell you. Okay, so business economics, I would say, it's the perfect language of business. It will communicate to you in case there are certain risks associated with a particular venture. Okay, so there are certain terminologies that we need to understand when it comes to business economics. Okay, let me just open that paper, because I know if I open that paper, I'll definitely find something linked to this. A second, I'm looking for something else. Okay, let me just explain this, and then afterwards I'll open the paper. Okay, so in terms of terminologies, okay, in terms of terminologies that we have to ensure we understand pertaining to business economics, number one is demand and supply. Mr. Oscar and Madam Hope, has any one of you gone through a past paper, a business economics past paper, to the manual? Anybody?
Yes.
Did you see demand and supply somewhere?
Yeah.
Okay, well, you were wondering like, what is this? Or you figured it out. Okay, so the terminology that we have to understand is demand and supply. Like I said, this is practically, I would say it's a little summary of most of the things pertaining to business economics. We'll eventually start this very week. I'll share the timetable today, and then when I share the timetable, we'll get to see the times and dates. We'll have our sessions, and then we'll start all over again. Okay, so I'll start with demand. Okay, when we talk about demand, we're looking at the quantity. Okay, the quantity of goods consumers are willing to buy at a given price. This is what demand is. So demand is the quantity of goods consumers are willing to buy at a given price. That's what demand is. The quantity of goods or the amount of goods your customers are willing to buy at a given price. So let's say, for instance, you produce 40,000 units of your products, 40,000. And then your customers only buy 20,000. It means the demand is half, okay? The demand is only 20,000 for those products, okay? And then we also talk about the supply. Okay, so when we talk about supply, it's also a quantity, by the way. When I say quantity, it means it's measured in units. Okay, so it represents the quantity of goods producers, here we're looking at producers, not consumers. Producers are willing to sell at a given price. Okay? Okay, so supply is the quantity of goods producers are willing to sell at a given price. Demand is the quantity of goods consumers are willing to buy at a given price. When you talk about demand, think about your customers buying goods. When you talk about supply, think about your suppliers or practically your producers producing goods. Okay, the amount of goods they are willing to sell, the amount of goods they are willing to buy, amount of goods they're willing to sell, amount of goods they're willing to buy. Okay, all right, so we have two laws, okay, when it comes to business economics. But this is in summary, meaning we'll get to look at this again in details in our main sessions, okay? But right now, I'm just giving it to you in brief. So we have two laws when it comes to business economics. We have what we call the law of demand, okay? And then we have what we call the law of supply. Okay, we have what we call the law of demand, and then we have what we call the law of supply. Okay, all right. Let's get to understand what the law of demand is. Okay, let's get to understand what the law of demand is. Let me explain it like this. Let me just type it like this. Okay, so as price, okay, as price increases, the demand falls. As price increases, the demand falls. Mr. Oscar, what does this mean? As price increases, the demand falls. What does this mean?
What's your question?
Yeah, the law of demand states that as price increases, the demand falls. What does this mean? I want you to explain it to me in a simple way.
When the prices increases, then the demands falls.
Yes.
It means, Kylie, like for example, if the goods are expensive, of course, there will be little demand with the consumers. They won't be buying a lot, like because it's expensive.
Okay. Yeah, that's correct. So the more your prices go up, the less people want to buy your product. Yeah.
Yeah.
And it's also vice versa. When the price goes down, then the demand increases. Okay, so let's talk about the law of supply now. Okay, So the law of supply says as price increases, supply rises. Okay, so it's not really like vice versa, like the law of demand. This one is slightly different. As price increases, the supply rises. Okay, so the producers want to make more profit. Okay, an example I can give you is if bread costs 30 kwacha, more people are going to buy it. But if it costs 100 kwacha, fewer people are going to buy it. Okay, and then apart from this, there's what we call elasticity. Okay, has anyone ever heard of elasticity? Elasticity. Elasticity. Has anyone ever heard of elasticity? Anybody? When you are going through the manual, did you by any chance bump into elasticity? Okay, so elasticity will basically show us, okay, it will practically show us the sensitivity of, it will practically show us the sensitivity of demand and supply. Let me change the phrasing. It will show us how sensitive, let me say how sensitive, how it will show us how sensitive demand and supply. Let me remove the off. I think my English was slightly off. Yeah, it will show us how sensitive demand and supply is to changes in price, income, or practically other factors. Okay, so elasticity basically shows us how sensitive demand and supply is to changes in price, income, or other factors. Like for instance, if they ask you to calculate the elasticity, they're basically asking you to calculate the sensitivity, how demand or supply is sensitive to a particular change. Okay, so we have what we call price elasticity of demand. So I'll give you an example. Let's say if bread price increases, then do people stop buying or they keep buying? Okay, that's the price elasticity of demand. Okay, price elasticity of demand. If a particular price of a particular product increases, will people stop buying that product or they will just reduce the rate at which they buy the product? That's the elasticity. That's the price elasticity. That's the type of elasticity, the sensitivity that is affected by price. Do you understand that, Madam Hope?
Yeah, I do.
Okay. And then we also have
Thank you.
income elasticity of demand. Like for instance, do people buy more chicken when their salary increases? Like for instance, if people, let's say for instance, the president increases the salary of all the civil servants, will they be buying more of a particular product? That's what we call income elasticity demand. Income, these are types of elasticity, by the way. We have price elasticity demand, the one I've explained. We have income elasticity demand, which refers to the general income for a number of people. If their income goes up, will they be buying a particular product? And then we have what we call cross elasticity. Okay, what we call cross elasticity, that's if the price of a particular product goes up and then people stop buying that product and instead start buying another product. Like for instance, if you are selling if you are selling I want to give you a perfect example. If someone is selling glasses and then the other person is selling capes, but it's hot, too sunny, and then the capes cover the face, so because it prevents from the sun, it covers this, and then the glasses do the same exact thing, and then people prefer capes. Okay, people prefer capes, and then the capes are 50 kwacha one, the glasses are probably like 60 kwacha, 70 kwacha, and then the capes hit 100 kwacha, and then people stop buying the capes, they start buying the sunglasses instead. That's what we call cross elasticity. So because the price of a particular product has gone up, the demand has shot up for another price, for another product which is used for almost the same purposes. You get my point, Madam Hope?
Yeah, I'm trying. Yeah.
You are trying to. May I make sure people get my point? Do you
No, I'll get it. Don't worry, I'll get it.
you get it?
Since you are typing, so yeah, it's fine.
I don't know. This I'm not typing because it's too much information. I'm just making a summary for the typing. It's not really like
Yeah.
every. Yeah, but we tend to look at this again because right now I'm doing more like a brief summary of everything that we need to know in terms of business economics, the definitions, and what we expect to find.
Okay.
Yeah, but immediately we start, we get to, because like for instance, elasticity, when we start, we won't just define it, but we start calculating it.
Yeah.
You get my point. So it'll be more
Mm-hmm.
detailed and it might even take some bit more time compared to what I'm doing. Because what I'm doing, I'm practically just defining things. And so that the next time we talk about elasticity, I'm like, okay, I think I know what elasticity is.
Okay.
Yeah. Okay. So, the other thing that we need to understand pertaining to business economics is production and costs. Okay. Thing that we need to understand in terms of business economics is production and costs. This one, okay, I was thinking you did management accounting or cost accounting. Anyways, so this one will find a number of costs. Like for instance, we'll get to understand cost behavior, okay, and cost classification. Classification, we're looking at the types of costs. Like for instance, a fixed cost. What's a fixed cost? A fixed cost is a cost that is affected by production. Okay, so let me say on production and cost, we are looking at businesses must understand, okay, businesses must understand how much it costs to produce goods. Okay, businesses must understand how much it costs to produce goods, and this will take us to cost accounting or management accounting, and we'll get to look at the types of costs. Like for instance, we'll get to look at cost classification and what we call fixed cost. A fixed cost is a cost that do not change with the levels of production. If the production is 50,000 units, the fixed cost is 100,000 kwacha, and then the production shoots up to 150 units, the fixed cost still remains the same. Okay, fixed costs are not affected by production. And then we have what we call variable costs. So these change with the level of productions. Usually we'll find things like raw materials and labor. These always change with the level of production. And then we have what we call total cost. Total cost basically represents our fixed cost plus our variable cost. When we get these two, we add it to give us what we call the total cost. And then we also have what we call average cost. An average cost is basically the cost per unit produced. You get the total cost divided by the number of units you produced, and it will give us what we call the average cost. And then we have what we call marginal cost or variable cost. So this represents the extra cost of producing 1 unit more. Every single time you produce 1 unit of a particular product, how much extra are you incurring? Okay, so let's say for instance you're producing 100 loaves of bread, okay, and then it costs 1000 kwacha to produce the loaves of bread. Then the average cost will be the 1000 divided by the 100, okay, giving us 10 kwacha per loaf. Let me show you. AC is the cost divided by the units. If we look at it in terms of bread, in my example, I said 100 loaves, or it's loaves, okay, at 1000 kwacha. The 1000 is everything. So for me to find the AC, which is the average cost, it will be 1000 divided by 100, which in turn will be the 1000 divided by 100, giving me 10 kwacha, okay, as the average cost. So the total cost, we just have to understand the type of cost. If it's a fixed cost, it's a variable cost, and then when we add the two, it will give us the total cost. Okay. The other thing that we have to understand pertaining to business economics, apart from the production and the cost, is what we call market structures. Okay, we need to understand the way our market system works. We need to understand the market structures. Okay, Okay, so every type of market actually affects pricing and the competition. Okay, so market structures, we're looking at the type of markets affects the type of markets. The type of market affects pricing and competition. How any type of market affects market and competition. Okay, we'll get to look at things like a monopoly. Has anyone ever heard of the word monopoly? Anybody? This is very common. Anyone? Monopoly. Has no one? Anyone? Monopoly? Has anyone heard of monopoly? Madam Hope, you're actually alone now. I've noticed you are the only one remaining. Have you ever heard of monopoly?
A monopoly, a one market system thing. I don't know.
Yeah.
No.
Yeah,
Okay.
you're correct. You're correct. Madam Hope, I think there's
Uh,
something that I'll need to do.
okay.
I'll need to build confidence.
Ah, no, it's been long. I learned economics in first semester, so I forgot. I was drained. I was disappointed with the marks that I got. So
Oh, you did learn business economics sometime back?
yeah, in a long time. So, anyway, I'll I'll catch up.
Yeah, you will. Because we actually starting. I'll send the timetable today, and then we are practically starting. All our sessions are starting tomorrow. So we might have the session tomorrow or Tuesday, depending with the final timetable that will be sent this evening.
Oh yeah.
Yeah. So you'll be joining the classes?
Yeah, I will.
Okay, perfect. All right.
Sure.
So just send me a hi on my number because I don't think I have your number, by the way. Okay. All right. So you are very correct on the monopoly definition. I'll give an example. An example of a monopoly is Zesco. Zesco is the only electricity supply company in Zambia, or maybe the only one that I know of. Maybe there's some more that I don't know, but even if they are there, they are not really affecting the market in any way. So it's just Zesco. You get my point, Madam Hope. So
Yeah, I get.
yeah. So a monopoly is a one seller. Uh, is one seller controls in a monopoly. One seller controls supply and the price. Okay. So, like for instance, Zesco controls the entire supply of electricity and the price of electricity. And then, apart from this, we also have what we call an oligopoly. How do I spell it? Oligopoly market. Okay, so in an oligopoly market, we have a few big companies dominating the market. Okay, we have a few big companies dominating the market. An example is, for instance, our telecom companies. We only have a few. We have Zamtel, we have MTN, we have Airtel, and then now Z Mobile is coming up. So it's only a few big companies that are dominating the market. It's not like too many companies, just a few, less than five. You get my point, madam.
Yeah, I get.
Yeah, and then we also have the types of competitions. Okay, we have what we call perfect competition. Okay, we have what we call perfect competition. Yeah, I felt my spelling of the word competition was incorrect. Okay, we have what we call perfect competition. So in perfect competition, we have let's say for instance, of many sellers, many suppliers. We have identical products, and then there is no single seller controlling the entire price. Okay, an example can be maybe the price of tomatoes at the market. It's the same price. It's not a single person controlling the price. It's practically the demand and supply chain, or practically the entire market controlling the price. It's not an individual or a single business. That's what we call perfect competition. And then we have what we call monopolistic competition. Okay, since madam, since you managed to define a monopoly, I want you to explain monopolistic competition as well. Just think about it. Try. I know you can do this. You got this.
And you know I can do it.
Yes, yes,
And monopoly.
yes. Monopolistic competition.
I put it? I don't know. Help me.
Okay, so let's link it to a monopoly. Okay, so a monopoly is a type of market in which one seller controls the supply and the price of a particular product. Example we gave this one. Okay, but when we talk about a monopolistic competition, here we have big sellers, yes. Okay, but there will probably be plenty with different products, but used for the same purposes. An example, we can talk about maybe restaurants. They are all serving different food. They are competitors, but they are serving different food. I'll give an example. We might have Zest, which will give you Nshima and eggs and whatever. And then we have Monadi Cafe, which will focus on the tea, the bread, and some fussy things. You notice that they are supplying different products. They are practically monopolies in their own fields, but they are still competing because it's all food products. You get my point?
Yeah.
Okay. Okay.
Yes.
All
Okay.
right. So these are some of the things that we actually talk about. The other things that we talk about, for instance, our national income. In national income. Here now, this is actually macroeconomics. Okay. Our national income and economic factors.
The micro part is done.
Yeah, I just gave you a summary of micro, but you definitely find some more info. But most of them are under everything that I've talked about.
Okay.
Yeah, I had summarized everything. Yeah, but
Sure.
otherwise, this is basically just the introduction. We practically start again from the first part. And the first question I'm going to ask is, what is business economics? So hope you are taking note.
Okay.
All right. So the national income and the economic factors. Okay.
Mm,
So under the national income, we'll get to understand our GDP, the gross domestic product, which represents the value of all goods and services produced in a particular country. And then we'll get to understand things like the inflation, which is the general rise in prices over a specific period of time. And then afterwards, we'll get to learn unemployment when people are willing to work but have no jobs. Okay. By the way, when you talk about unemployment, you're not saying people are not working. You're saying people are willing to work, but they have no jobs. You get the difference, Madam Hope.
yeah.
Yeah, okay. And then we also talk about the balance of payments, the difference between the imports and the exports. Okay, so many businesses actually watch these particular indicators because they actually affect demand and also affect profitability. Okay, and then after looking at this, the national income and economic factors, will then put into consideration the government and businesses. Do you know that the government itself actually affects business economics like very much?
Okay.
Yeah. So the government influences business through things like taxes. You are paying VAT, pay as you earn, income tax every single time. Okay. Subsidies, like for instance, they are supporting farmers and your business is in farming, or they are supporting fuel and your business is under fuel. Okay. Or it's transportation and then the price goes down because the government is paying subsidies. Okay. And also due to regulations, the regulations that might affect some of your costs, like for instance the minimum wage or the safety laws, would definitely affect the cost of you running your business. Like for instance, you had budgeted to pay an employee 4,000, but the minimum wage says 6, so now you have to pay them 6,000, which is good for the employee but bad for your business. Mhm. Do you agree, Madam Hope, that it's bad for your business?
Yeah, somehow. Maybe. Yeah.
Yes, because meaning you have to spend more than you initially planned. Because now there is a mandated, now the wages and salaries will not be determined by the amount of money you make or the amount of money you have, but they'll be determined by the government. They'll tell you how much money minimum you're supposed to give your employees. Okay, and then we'll also have to understand our monetary policy, the control of money supply via the Bank of Zambia. And then lastly, we'll talk about the international trade, the imports, the exports, the exchange rates, and also things like the trade policies. So, in brief, we can say business economics is practically using economics to solve business problems. It covers things like, the demand and supply, elasticity, cost of production, the market structures, the national income and indicators, the government and businesses, and the international trade. So this is what business economics is, and this is what it involves. Madam Hope, I'm expecting a few questions from you.
Mm, from me.
Yes, from you.
What will I ask? Okay, you can ask me maybe, or maybe next time. But for now, I think, yeah,
You want
you
me to
can
ask
answer.
you instead?
Yeah, but not something that I've not learned, please.
Okay, okay. Define business economy. Okay, okay, let me do this. Wait, before I start asking you, let me stop recording. Is that okay?
Yeah, it's fine.
Yeah, because otherwise everyone is going to watch your responses. Stop recording. Okay.